Here at Post 9 is Tom Lee, Fundstrat Global Advisors, Head of Research, and Fundstrat Capital, Chief Investment Officer, also a CNBC contributor. Good to have you, Tom. So how are you, if we could just take a step back, how are you thinking about the whole Nvidia phenomenon at $4 trillion against this backdrop of just broad AI demand, as well as just appetite in the market for kind of this risk-on sentiment as made evident by the Bitcoin move?
Well, to me, Nvidia being the most valuable company in the S&P makes a lot of sense. I mean, that's scarce. I mean, how many Nvidias are there in the world, right? There's 50,000 stocks. There's one Nvidia. And so it is scarcer than, like, Da Vinci. So I do think the multiple at around 30 times is actually not that extended, given how important they are to the AI ecosystem. So I think there's earnings visibility and there's multiple expansion potential.
Multiple expansion potential for Nvidia, as well as just the broader NASDAQ from here. Do you think there are significant catalysts to the upside?
Yeah, I think to the extent that there's companies that are producing durable, sustained earnings growth, whether it's the Palantirs or the Nvidias or the Teslas of the world, they do deserve higher multiples. And you know, something that we've been writing about is how this market endured 6 essentially black swans in the last 5 years, thrived in terms of earnings. Normally, we would assign a higher market multiple to that. And believe it or not, the mean S&P PE, so if you do the S&P equal weight, was 17.9 on the eve of COVID. It's about 0.7 turns lower today. We're like at a 16 mean multiple, meaning the market got cheaper after 6 black swans. I almost think we should be expanding that PE.
There are some complaints this morning about, again, market concentration, right? When you got the top 10, is it 40% of market cap? Something. Nvidia alone's almost 8%.
That's right. But then again, these exact companies are a huge share of earnings growth, you know? So I think that the S&P is benefiting from the fact that it is sitting at the center of AI, which is a huge global driver of CapEx spend. It's going to help S&P earnings. And then the other piece is, of course, financial innovation, which is taking place. I mean, Circle and the cryptos have shown that that's another piece where there's a lot of earnings growth. And again, that's a growing share of the S&P.